Welcome everyone to the live video for the Gamma Optimizer Room. This is uh, the fair live video, no? We had a Good Friday last Friday, so we are doing it today. And I don't know if anyone is in the video yet because I'm using YouTube, so it's hard for me to see. I think there's some people here. Okay, so TC, thank you. So we have good audio and good video. Okay, so let's start to see what we have in store for today. We had a short week last week, so there is a little bit, I'm going to use a little bit of today with what we had last week. Now, in terms of close positions, we had a short trading week, only 4 trades, and actually it was a good week for ultra pure constant experimental. Now, for those of you that were following the net, it was really good. Now we got 3 wins and 1 loss. We haven't seen such a great performance in a while, and most of it it came from short iron condors. Now it was like 3 short iron condors wins, and that was kind of interesting because we got some edge there. 3 wins and 1 loss provides substantial edge. So the net gain was like 290 with friction. No, yeah, it was a good gain, and that gain put the performance for April finally green. Has been oscillated, small red, small green. And it's in general to me the from last week, at least from the action last week, it's good to see pure constant experimental recovery. It's good to see that the net is recovering a little bit. And as a reference for this week, including today, I have been testing the tune version, the hyper tune version. That's what I'm doing right now. I'm trying to see how it performs, not for my own book, but remember the official trade remains experimental. I'm just doing tests for my own book. Okay, so everyone is here. I'm glad. Hello, Jim. So not a bad week today. It seems that we are going to start the week with a loss, but it was okay. I mean, for those of you doing constant experimental, it's a small loss. Even for me, it's a small loss. I only have a 1 contract. And I want to talk more about the action today, like why we got the loss. So let's talk about the GT level. The GT level actually moved down quite a bit. No, it is a massive move down. It's like hundred and something points now. But the market is also down. No, the market is also 150 points down. So yeah, the GT level keeps moving down, and in a sense, that is a good information. No, the fact that the GT level is moving down with the market is providing good information. In what sense? It's providing good information in the sense that big players don't seem to be opening new hedges at this point. No, they don't seem to be adding put gamma. In particular, they don't seem to be adding out of the money put gamma, and that is reflected in the second bullet here. That we are really like deep short gamma, about 9-10% below the GT level. Yet gamma imbalances are extremely low. Not extremely low, but I mean subdued for the kind of regime which will be now, which will be seeing hundreds of billions of gamma imbalance. But yet we are only seeing like 60 billion to the downside, 53 billion to the upside. Imbalances are very low, and that's right there is a hint that most of that gamma is coming from deep in the money options, now, like really deep in the money. And if you recall, deep in the money options have very little gamma. So we do have huge open interest in puts, but most of those puts are deep in the money. So it's not that they provide tons of gamma to the market, and that's why the gamma imbalances they don't seem to be out of control. So I guess we haven't seen opening of new hedges right now. I guess the thesis for everyone, and even for people like us, it's easy to see that the thesis is that we are getting close to some kind of local bottom, as they like to call it now. So I guess big players are also playing the same, and that they are also seeing the same. They are also seeing that the local bottom is inside. Another thing of interest for today, and this is really interesting, is that we have this flush. We are probably more than 3% down today. Yeah, 3.5 probably, and yet the realized variance is so low, it's 14% and decreasing. And it's very likely that if this action continues, if the trend continues, the market could be flushing 4% by the close, no? Around 4 p.m., which will be 4, even 5%, yet intraday realized variance is extremely low. It's extremely low, and there are a couple of explanations for being so low, and I like both explanations. One is that it's mostly retail oriented. That could be an explanation. My favorite one is that most of the action has been a program selling, so a liquidation. Someone is liquidating positions, rotating out of stocks, and doing it in a careful program manner. But beyond who is the source of the selling, no, we don't, like, it really is irrelevant at this point if the source are retail or institutional. The fact is that liquidity is plentiful. That's the fact that we are seeing plentiful liquidity right now, and I guess the liquidity providers are willing to buy those shares that everyone else is selling. So that's the message for today. Now there is sustained selling, yet the market makers are willing to take on it, and I guess that could be when it could be construed. I mean, I just guessing here, but it could be construed as at least market makers being comfortable building inventory again. And remember, in the last couple of weeks, even for upside action, we saw extreme values of realized volatility, meaning that dealers were not comfortable buying or making markets at those levels. But here, Citadel and Virtu seem to be comfortable buying from everyone else. So what I'm trying to say here is that we might be seeing early signs of at least some kind of temporary bottom in the market right now, even today. And when we look at volatility, we can see it here. Realized volatility for the last 20 sessions, which is roughly the monthly volatility, remains sticky at 50%. It was like 48.9, almost 49 last week. So it went up just a little bit this week, and it's 50%, which is ridiculous. Those are outrageous values, the crash level values of realized volatility. It's extreme volatility. But if you pay attention to RB10 and RB5, which are the 10 session and 5 session respectively, 2 weeks and 1 week, even though those values are still very high, 57 and 31, they are actually very low compared to what they were on April 11. Now, in April 11, RB10 was substantially higher, almost 70, and RB5 was like 80 something. It was some kind of really ridiculous value. So clearly, liquidity is improving in the near term. So that's another sign that there is liquidity is coming back into the market now. In particular, for the last week, for the last 5 trading sessions, liquidity is coming back. It could be all a mirage. It could be the mirage that last week was a spring break, Easter holiday, everyone was on vacation, including me. So it could be a sign that there were almost no trades done, no deals done, and that's why realized volatility is so low. But I think that even today we are seeing very low realized volatility, so it might continue, the trend might continue. Even VIX is lower than what it was on Friday, April 11th. I'm not saying that it's lower than last Thursday, but it's lower than the last time we had a live video. So that is showing, that shows something, that shows that even with the action today, dealers remain a little bit, they seem to be relaxing a little bit. They seem to be allowing this selling to proceed without affecting VIX that much. And you can also see that with 1 week VIX. 1 week VIX is also low, it's flattish compared to VIX. And it's also a massive drop from what the levels we saw in April 11. Now, in April 11, it was outrageously overpriced, and right now, I guess for next Monday, it doesn't look that overpriced. So, to me, it looks like dealers are cautious, but kind of relaxing, at least for this week. When we compare this action with April 11, that's when we compare it. So that's kind of the picture in terms of realized volatility. But then when we look at the term structure, And this is what we see. This is a very interesting term structure, like weird. I guess when I present in YouTube, you cannot see my mouth, so I will try to describe this as much as I can. But I notice that first, it remains elevated. It's actually, this is compared versus previous Monday. So it's actually higher than the previous Monday, the 14th. So you can see that volatility is trending up across all expirations. But the other thing is the massive bump that we're seeing. You guys can see a bump like 2 weeks from now, like 10 points from now. Is that a Fed meeting? I don't know what is that, like what is causing that interesting bump. That's a very, very interesting bump. So it has to be 10 days from now, it has to be either a Fed meeting or a CPI release, or I don't know what. No, what is coming into view? Are we talking about sector tariffs? I don't even recall when those things are supposed to go in effect. Sector tariffs supposed to go in effect early May. I'm not sure. So something is going on, and dealers are repricing accordingly. In any case, absolute levels are very elevated, and you can see that this thing remains at least inverted. From that point on, from 2 weeks on, it remains inverted, and it's very interesting that it's not inverted in the next 2 weeks. So probably that's what we are seeing today. Probably dealers are relaxing in the sense that they are waiting for that event, whatever it is, and so they don't think the market will kind of move much until that point. No, once the event is over, all bets are off. But I guess that's what we have right now. No, we have the bump there. So it's very weird, no, very weird term structure right now. It's not normalizing yet. I guess the message is it's not normalizing. We'll see. I guess we have to pay attention for 2 weeks from now about what is going on. Okay, realized variance on the other hand, remember realized variance is measured intraday. This is the intraday action that we measure minute to minute. Now every minute we take a measure, and that's how it is computed. Do you notice that is, I don't know, quote normalizing, unquote? At least it's below 25%. No, so compared with the previous action, it is okay. No, last week we still closed about 20%, but today is around 14. So it seems to be in the path of normalizing after the craziness. Now you see the huge peak almost hitting 80, or probably surpassing 80, and now you see that is improving. Something to keep an eye on is that if the market continues like this, if we keep seeing the action we are seeing right now, we keep seeing this kind of intraday volatility, we are going to close below 10% today. It's very, very likely. We are going to close, we are at 2 p.m. and we are 14. And if the market doesn't do anything, so we are going to close around 10, let's say around 10%, which is, as you guys know, I always keep calling it as that's my reference point. No, that's my point of reference for the market from the downside leg of the market ending. So it could be that we are approaching that point. I am surprised to see it happening that fast, and in particular today. And today of all days, that the market is tanking, basically is consistently selling, is finding, is having a hard time finding a floor, and yet intraday realized variance is so low. So who knows, maybe today marks the end of the downside, but we never know. Now, remember, we are in interesting times, so there is always some kind of unexpected announcement or external event that could inject more volatility. But in terms of what is happening today, certainly it looks like we are approaching that local bottom in the market. And variance risk premium, for those of you that are new to the room, I should explain what variance risk premium is measuring. Variance risk premium measures the difference between option prices versus what actually happened. So when variance risk premium is negative, it means that dealers screw up. No, it really means that they misprice options. They tend to always overprice options. They are really good at that, at overpricing options for all regimes, but clearly this recent regime took them by surprise. So BRPX extremely negative, and my surprise is that it moved even a little bit more negative last week. But in any case, I don't think dealers are going to be allowed to be born much longer, to keep being born much longer. So this thing is going to flip positive with a vengeance. This thing is going to flip positive pretty soon. So I think, to me, I think that realized variance and in particular realized variance is going to start normalizing this week. So that means that variance risk premium is going to start normalizing this week. What is the takeaway from this? The takeaway is that this is a great moment. I will say that the trade for today was a good trade, even though it's going to lose. I like it because it kind of joins with my thesis here with variance risk premium. When variance risk premium is in this configuration, and if the thesis is that it's going to flip positive in the near term, then the best type of trade to do is a long risk reversal. You sell expensive puts and buy not as expensive calls. And that's a good way to extract variance risk premium. It is like in my case, of course, I don't do naked anything. So I sell the put spread and buy the call spread. That's what I tend to do, and that's what the position we had on for today. That is not going to work, but I think that was in spirit, that was a good trade, and I think those are the kind of trades that are going to work going forward this week if we do see a normalization of realized variance, and maybe you can see a hint of it on the blue line there. You see the blue line represents intraday realized, not intraday, but close to close realized variance, and you can see it dropping massively after the craziness now. So it looks like we are close to that point where things might recover. It's not. I'm not saying that yes, tomorrow the market is going to rally, but at least we seem to be close, and there could be an edge on those kind of trades. Now, ambiguity. Well, ambiguity is so weird. Ambiguity was almost zero, and I don't even know how it hit 0.2 on April 11. How did it do that? No idea. But now it's normalizing again. I really don't know what to make of this. I know GU is the one that it has been very skeptical of ambiguity for a while, but I don't know what ambiguity is trying to tell us. I mean, in the purest sense, if we interiorize ambiguity as variance of volatility, then yes, it makes sense that it went up again so quickly because we have tremendous variance in variance. Like we have days where the market was extremely volatile, then they will have days with little volatility. So the changes in volatility themselves were extreme, and I guess that's one of the reasons it reached 0.2. But for all of the fall today, I think the market is kind of close to what it was on April 11. We are not that far. I mean, we are 3.5% below, probably, or a little more than what it was on April 11. But still, I don't think ambiguity is giving us a hard signal here. But I'm just keeping an eye on it, just in case it keeps reaching for 0.4 or higher values. But we'll see. So it should start normalizing and just adding and commenting here right now. Okay. In terms of the trade plan is simple. Pure constant experimentally is the net and allowing it to recover, and recover it did. It only takes a little bit of myself saying out loud that I want to replace it for it to recover. So it recovered last week a little bit, but still I want to test hypertuned. So you can ignore my testing. You want to test with me, by all means follow me on the trades, but remember the official system is constant experimental. Please get the trades out of that tab in the variance center. But I am testing it and see. I mean, the test didn't work today for any net, but we'll see tomorrow. We'll see how it goes from here until tomorrow. Now let's switch to the variance center really quickly. Okay, here we have the variance center. The variance center looks okay. It's just reinforcing a little bit of the points I made. That look at this. I'm going to highlight them. The imbalances They are not small. No, 59 billion is not a small value, but they should be substantially higher than these values, given that we are what 10%, no, like 9 point something percent below the GT level. No, so considering where we are, we should be expecting to see this gamma to be substantially higher. But I guess my thesis is that the reason is not as this is that most of the gamma is coming from deep in the money puts. And then you can see here in the gamma imbalance chart that even the strike with the highest gamma imbalance is only 3 billion, which is the 5,000 strike. No, so it's not that there is tons of gamma on those. If you have good memories, you could recall that we have seen strikes with 10 billion imbalance on them. So those are kind of small values for imbalance, and I guess most of the big players had puts way 6,000 puts are with those strikes, and they are like content letting those puts milking those puts making money with them. They are content hedging. Of interest here, as I mentioned, is realized variance. This is extremely low realized variance. This is surprisingly low. Now the market is down quite a bit, and realized variance is only 14. And if you look at realized variance for the last half an hour, it's 11. So that might be the finishing value that we see. The closing value that we'll see is probably around 11, which is a great step towards normalization in the market. I guess that's what it takes. And in terms of kurtosis, the same thing. Kurtosis is extremely low, not even 3. No, remember that ideal kurtosis for a Gaussian distribution is 3.0, and we are around 2.79. And if you look at the advanced variance center, kurtosis since opening is 3.46, so it's like pretty much Gaussian. This is a Gaussian as it gets. No, it's just random moves around a mean. There is no hidden hand of the market right now. And finally, something I wanted to show is the historical realized variance chart. You can see that we got some crazy actions or crazy peaks, and recently market was around 17, 19, 20, and today we are going to start substantially lower. So let's keep an eye on that. If tomorrow we see another day of 14% or lower, then that is a great sign that we are approaching the local bottom. Now, I'm not calling it, okay? Please don't go second mortgage your home. What I'm saying is that there seem to be early signs, at least for the next couple of weeks, that there is going to be some calm in the market. It's going to be a little calmer action. I don't know if it is the signs for future upside. What I mean is, in terms of volatility, it looks like it's a good sign that because that means the liquidity providers, like market makers, are willing to provide liquidity right now, and those guys must know something, no? So in that sense, it's positive. And for those of you that are going to do the trades, remember that is the first step. The ultra pure constant X is the official trade, and for now, if you look at the signs, the negative signs mean sell. So it's suggesting to sell both tails, so that means a short iron condor for tomorrow. No? And that's what it looks. Constant stable looks like a short risk reversal, and constant tune, which is the one I'm testing, looks like a short iron condor. So my test seems to agree with the official net for today, but I mean, this is too early now. We will have to revisit this in an hour and a half and see how it looks like. But that's pretty much it, I guess, what I have for today. I really hope you guys enjoyed your your holidays last week. No, I hope every one of you had a great time, relaxing, and it's going to be interesting how this week progresses. No, right now is very interesting in action. It's definitely a very interesting day in the market. Is very atypical. I was not expecting it to be like this, but it is what it is. So thank you again. This was a short meeting, and I appreciate you guys coming to YouTube for this. Usually when the meetings are out of sync with the normal schedule, I do it on YouTube, so I don't interfere with live videos from the other analysts in the room. No, that's the reason we are doing it, but it's only temporary. No? On Friday, we'll resume meetings again. So thank you, everyone. Have a great day, and as usual, questions, I'll follow up questions in the room. Take care, everyone. Have a great afternoon.